On this episode, get your tickers open. We're going to talk stocks. We're going to talk sectors, up, down, sideways, lose money, make money. The John Fosco way. Huh? No? Huh?
Listen. The John Fosco way is not endorsed. We do. Yeah. We do talk about what's going on in the markets now. We even give our longs. So if you're looking into positions, we do share our personal longs, where our personal money is and all that stuff. But listen, it's a fascinating time to look at the market. Some would say there's a lot of funny money out there. Some would say it's going to keep going up. Some would say it's going to go down. We get into all of it.
Yeah, it's a lot of fun. Let's go to the show.
Yes, sir.
What's up, everybody, and welcome to another episode of Business and Biceps. And you better wake your ass up, because on today's show, we're going to talk some stock talk. We've been having lots of feedback on talking about the market. We obviously released this later today, so it's the same day you guys are listening to us record. So I think it'll be real interesting to kind of go through different sectors. And once again, we are not experts, but we're businessmen that pay attention, and we're intrigued by a lot of stuff going on. There's a lot of opportunities, and I think it could be a real fun conversation, John.
Yeah. I think it absolutely can. And like we were just talking about right before we started recording, I personally find it interesting, and I know you said you did too, when you watch a financial network or you watch people who you look to for financial news or advice, and then you see what they hold in their portfolio, because then you can then say, okay, these people clearly know what they're doing. I want to know what their longs are. I want to know what their shorts are. I want to know what their overall opinion is on the market, because when someone's talking, it's one thing. When their money is in something and they're on the record, my money is here. I think that gives it, at a minimum, people the ability to go research where, let's say, your money might be or my money might be, and they could size it up for themselves.
Put your money where your mouth is, boy, right? I mean, that's the fucking
truth.
truth.
Yes, sir.
You know, I don't think I've ever asked you this, John. What's your opinion on Kramer? Do you like watching Kramer? Do you like what he says? Do you like his style? Like, I don't think we've ever, it's funny. I would think this would have came up, and maybe his name has, but I don't know if we've ever talked about him specifically.
I have, here's what I think about Kramer.
We're talking about Jim Cramer from CNBC, for you guys that aren't aware. But go ahead.
He hosts, Mad Money. He's basically the all-star of that network.
For sure.
And he has an infectious personality, big Eagles fan. But either way, when I first started controlling my own investments, I watched his show, I think, religiously every night for about 2 years. And I took a lot of good information from him. There is no doubt in my mind that he has relationships with certain banks and certain companies that he likes to push. And I don't necessarily like that, but listen, that's part of the game. But I think here, for people to form an opinion on Jim Cramer, I would ask everybody to go to YouTube. And I think YouTube got this clip pulled because it's such a highly viewed clip. Actually, you might want to go to Comedy Central's online video platform and watch The Daily Show. Jon Stewart has Jim Cramer on, and this is in the previous financial crisis. And he has audio of Cramer, basically not on Mad Money, before CNBC, talking about how to game this system and how to game the retail investor, aka me and you and everyone listening.
Wow.
And Cramer, I'm sorry, Jon Stewart puts it on for the audience. Cramer didn't know it was coming, and Stewart just blazes him. Absolutely blazes him. So listen,
really, I wasn't aware of that at all.
You need to watch it. It is.
Wow.
It's embarrassing. It's to the point where Cramer, he noticeably starts sweating. He starts shaking. He starts saying, double speak. So listen, I like Cramer overall. I think there's a lot of good things people can take from him, but I think people need to make up their own mind when it comes to someone who may have some ulterior motives.
Yeah, I think that if I learned anything by paying attention to stock, usually people that have a voice, especially as big as his, probably have interests that you're not aware of or relationships you're not aware of. That's part of that game. I think Cramer, so I follow him on Twitter. I wasn't aware of that, but I'm definitely going to go check that out. But I follow him on Twitter, and I do like in sample sizes. I don't watch Mad Money or any of that, but just seeing the things that he's speaking about, and he makes you aware. I think it's one of his accounts he runs where he lets you know like what's the earnings are going to be reported that day. It basically can kind of keep you.
Well,
like,
he owns the website, thestreet.com.
That's what it. Yeah. So I follow the street, and so it allows you to understand like, okay, this is what's coming in this sector. This kind of lets you, and I think places like just even your free stock thing that's on your iPhone does some good jobs of that kind of stuff. But Kramer's definitely a cool resource. I wondered how much value you took in what he had to say though. So it's been a good experience for the most part then.
I think here's what I think he does best. I think he gives you good ideas on where to look when it comes to investing, because a lot of people don't know where to look. So like, here's something he started pushing, and this is a very generic example is, okay, guys, we got this pandemic. What are companies that support a stay-at-home economy? And then he starts talking about food companies like Hormel, delivery companies like Domino's Pizza. Like he'll put out something that makes sense in society, and he'll give you an idea on where to look. I think that's what he's best used for.
Yeah. What's your thoughts on the vaccine talk, John, from a stock standpoint? There's, obviously the major players are in it, the Pfizers of the world, but then also there's some of these, there's a Novo, there's fucking that Moderna company, or however you say, like, are you buying into the hype of the vaccine opportunity, or are you kind of a sideline guy when it comes to that?
I am, when it comes to that, it's all speculation. A vaccine, as we all know, takes a long time to develop. So I know Moderna got a big pop. For those of you who don't know, Moderna is a pharma company, and they said they're working on a vaccine. They're seeing positive things. It's going to take a long time for anybody to produce a vaccine, and multiple companies are working on a vaccine. So when you hear about a vaccine in the bubble of the stock market and, oh, should I buy this company? Should I not? Okay, speculation creates volatility. Volatility creates trading opportunities. So I think it's good to go in and out on speculation about a vaccine, but I'm not going long on anyone saying, oh, we have progress, right? There was like a remdesivir from Gilead.
Yep.
Was supposed to be it, oh, we have progress, that moved it. Well, now it's fucking Moderna. We're so far from having a vaccine, and I know remdesivir is not a vaccine. It's used to treat it. But listen, these are trading opportunities, and when I say trading, I mean money in, money out. You know what I'm saying? I would not go long on a speculative vaccine. I think that's bad money.
Yeah, I think it'd be really hard. I mean, it literally is gambling, because who the fuck knows who's going to come up with the actual treatment or vaccine out of all these guys that, you got the biotechs that are smaller companies, but then you got the big boys, better believe it. They're fucking heavy in this right now.
Yeah.
So I'd rather keep, to me, I'm watching and paying attention to those, and yeah, they could run 20% in a day, but like Moderna went and then right back down, you know what I'm saying? And it swung, I think it was like $12, which means somebody made money.
Of course, that's what I'm saying. Guys like Jim Cramer, when he was running his hedge fund, and hedge fund people, they know the financial news that's breaking at 6 a.m. that is going to jolt the market. Yes. Okay. And they are going to capitalize on the Moderna news. And then when you see it crash the next day, it's because they bought so many shares, they made their $12, right? And then they sold so many shares, which pushed the price down. So that's where you have to be careful with these huge speculative instruments like pharmaceutical companies that are producing vaccines. Cory, I don't think in the history of this show I've ever done this, but I have to go to the bathroom right now. So I don't know if we're going to edit this.
Should I bring Trey in?
You can do whatever you want, but I'm about to put my penis in a monster can, and I don't think that would be good. So I'm gonna be back in 1 minute, because I don't want to fucking get my urethra cut on aluminum.
No, please do that. I'm bringing in Trey. Trey, jump on real quick.
Trey on the air, side shop.
This is amazing. Yes, Trey, all of a sudden on the show.
Yeah, I'm back on the show, I guess.
Listen, hey Trey. Now, what I love about me and you talk about this all the time. You're a young dude, 20. How old are you?
20.
20, and you've been putting money in Robinhood, and you're the one who was like, gee, I'm long on Snapchat. I'm all in, because you see you see the younger people using it. And what I want to talk about is that you're a guy that is young in your career, but have lived below your means and then invested. I mean, what in my mind, I know the number you've told me, like a decent amount of money. And talk about that process, because a lot of people don't even think about that when they're 20 years old.
Yeah. So it all started back in high school. Actually, it was like sophomore, junior year of high school. You're sitting in class or study hall. You don't really have much time at all. So you're just kind of wondering, what do I do instead of just fucking around off with your friends? You start paying attention on your phone, using your phone actually as a resource, basically, to learn something, which is what it should be used for. So you start investing on get on Robinhood, which I heard from the Business and Biceps podcast, which I was listening to at that
That's
time.
amazing.
So I got on Robinhood, threw a little bit of money in, just started messing around. At first, obviously you lose some money, but you got to lose some to learn. So started following, different websites, getting a lot of different information, and then just started kind of building my own portfolio then. And then once I came down here went to work for Business Biceps and Max Effort and Cory and all them, and started talking with Cory a lot more and just gaining a lot more knowledge. And honestly, just every time I get a paycheck, then it's just setting off a little bit of money, to invest, because I understand the long-term return from it especially after, hearing Cory and John talk about it all the time.
Isn't it crazy how when the environment dialogue is that, it becomes more like, so if John and I were only talking about the next car, the next watch, or the next whatever, not that that's what you would do, but that's what you hear. So instead we're talking about long-term investments, dividends, and those things. Isn't that crazy how that environment has a lot to do with that, bro? Because it's like, I want to say like we're making it cool to do that, but that's what we talk about.
It's definitely a lot nicer than talking about, like girls or going out, partying, that kind of stuff like that.
Fosco's back. Hey, stay in there 1 second more. Stay in there 1 more second, Trey.
Who's making what cool?
Hey, so here, John, what I was talking about is, so Trey originally heard us talk about Robinhood on this podcast, right? When he was in high school, which was amazing. And he started sectioning off, small pieces of his paycheck or whatever he was doing then. And then now working with us.
He's the CEO of Psych Shop, motherfucker.
That too, motherfucker.
He's got that bag, boy.
But what I was explaining is that, he was doing his own research. Then he started being around us, listening to us and doing whatever. And like, we talk about those things, putting in a certain amount in your Robinhood, building that. It's the environment of what I guess what I was saying is that we're not talking about buying stuff. We're talking about doing this stuff. So that's like our dialogue, which for a 21-year-old guy, him, Jason, like this is the stuff they're doing, which is going to make them potentially ahead of us, because we weren't doing this shit when we were fucking 20 years old, Johnny.
That's the
hope, right?
That's the hope, 100%, dude.
So it's pretty cool. All right, good job, Trey. Good job tagging in.
Yeah, good job, Dier. Let's do this.
He's like, I guess I'm back on the show. That's what he said. All right, so let's talk some sectors, John. Like, so we talked about the vaccines, and I don't own any vaccine stocks. I haven't, except for I own Pfizer, and I'm hoping they got so much money they'll figure it out. But talk about big tech. I know obviously we just talked Facebook hit. I mean, I'm looking right now, it's $228 a share. That's an all-time high. They just launched that shop platform, which essentially people can buy straight off of the app now into a store, which is kind of Shopify-ish, which is kind of interesting, huh?
Yeah, I mean, Facebook is, I think, is a master at seeing what I think. Here's the best example: seeing what other tech companies that compete with them do great, and then doing it almost as good or better. And I think the best example would be, Snapchat stories.
Yep.
You know what I'm saying? They just fucking
for IG stories, you just smoked them.
Just smoked them. And I believe if it's not out yet, they have basically a Zoom competitor, where a bunch of people can join in, and they have, I believe, approaching 3 billion users, obviously with WhatsApp, Instagram. So 3 billion users is almost the whole world.
Yeah, basically,
it's almost the whole world.
And you still own not Snapchat, but Facebook, John. You've been in Facebook for a while.
Yeah, Facebook is one of my largest longs for sure.
Yeah. I mean, it shouldn't get any smaller anytime soon.
Well, yeah, it's just, a lot of people can look to tech and they can look at antitrust lawsuits and, information. And this is how I look at it. I look at it like this. The government doesn't understand most things. And the last thing it's going to understand is fucking tech built by Silicon Valley geniuses. That's the last thing they're ever going to understand. So if they don't understand it, how do they regulate it? And I'm not saying that the tech companies are doing anything bad. And if someone can make an indictment, they take your data and they do this. My view is very simple. You don't have to be on Instagram. You don't have to be on Facebook. If you're on Instagram, if you're on Facebook, if you're on if you choose to use those free platforms, don't complain about what they do with your data. Don't complain. You don't have to be on them.
That's true.
Right?
They're not forcing you.
It's that simple. So if they want to go sell your data, you know what I say? I say good for them because they have built
true capitalists.
so powerful that why shouldn't they? I mean, what if you built something so ingenious that at every fucking turn you had something to sell to advertisers that they wanted? That is the definition of a phenomenal business model.
Yeah.
And they have our data, and we again are voluntarily participating in their service. So listen, that's a knock on big tech. Listen, tech is the internet. The internet cannot be stopped. Tech cannot be stopped, especially, I'm not even going to say a post-COVID, pre-COVID. It doesn't matter. Technology is the future. And I like to put my money in things that I don't think are in their prime, past their prime. I like to put my money in things where I believe, and of course, as a speculator, it's just what I believe. I believe they are far from their prime and they're heading that way.
Which is Amazon, Shopify, Facebook.
I would say my number one stock in terms of belief for the long term would be Shopify. 100.
Yeah, it's just a beast, bro.
So, and it's like for people who don't understand, it's like, okay, so 5 years ago, if you wanted to build a website, you would either get a custom website builder, or you would go to like GoDaddy and get some bullshit or Wix. And Shopify essentially built a platform for people who sell online. And then they went and did all these exclusive deals. The most, out there one is Instagram, where you could tap a button on a fitness model's shirt and you could buy it right off it. So Shopify is the most integrated e-commerce platform in the world. And if you are going to make a move from brick and mortar or just not having a business to having an online business and you sell things, odds are you're going with Shopify. So I don't know anyone who thinks that we're not going to have more commerce online than less commerce. So that's why I like to simplify it if I can. That's why my money is there.
Yeah. In your mind, John, so like I've been in and out of Facebook and Shopify both. And it's like, I'm looking at them now because I'm not in both. I'm actually, my kids are still, I still have Facebook shares I bought for them, but it's like, is it still a good buy? And the answer probably is yes, because they're not stopping anytime soon. Obviously the multiple might not be as high, but who knows, right? Shopify could be $4,000 a share 10 years from now. You just never know, right, John?
Yeah, it's one of those things where it's like, okay, if we're talking about a market that isn't going into a recession, like if we had a clean slate and we're just looking at it, of course they're a good buy. Because I remember when I bought Amazon at $260, and then here's what happens when you buy stock, right? You buy Amazon at $260, and then it goes up to 500, and you think, dude, man, it's just too expensive now, right?
Yeah.
Amazon's $2,500 now. So
it'd be 5 times your money from there. Exactly.
Yeah. And there's so many.
That's why I'm looking at it right now thinking this is like a damn index fund. How is it not going to be $5,000? How can I not at least double it from here, Johnny? That's why I've taken a different approach, because I was in and out of it too a little bit because I was moving some stuff and they don't pay dividends when I was on that kick. Now I'm kind of thinking a little differently. Still doing the dividend thing, but I'm looking at this tech because it's just not going anywhere. This is how we live, bro. And it showcased it even more with what we just went through and what we're going through. So how, when I'm 60, is Bezos not, and this is the other thing. I watched I rewatched The Men Who Built America. I'm watching right now The Frontier Men Who Built America.
Oh, yeah, I've seen that. Yeah.
And I'm thinking like,
Daniel Boone.
Yeah, Daniel Boone's a beast, right? So that's what we're watching right now. Bezos, Zuckerberg, and fucking, I mean, the dude from Elon Musk. These are those guys, don't you think, Sean?
Gates, Jobs,
but even Gates and Jobs or not Carnegie, Gates and Jobs and Buffett, they're almost, to me, almost in a different area because they've already kind of been massive. Where Elon, Mark, and these guys are right now. So that's where I almost kind of, you know what I'm saying, section them off. I feel like Gates and Buffett and Jobs are a different group that I really wasn't heavy in because I don't know, I just wasn't. But these guys, you can essentially play in their marketplace as they're building and just, you know, because Bezos probably will be the first trillionaire.
Yeah. So,
right.
Yeah.
Does that make sense?
I mean, I view it like this. So like okay. So when you look at Rockefeller and Carnegie and
Vanderbilt,
all these guys, I think more than anything, they weren't, how do I put it? They weren't Thomas Edison. They weren't Nikola Tesla. Those guys were like the inventors.
Or Ford even.
What's up?
Even Ford too. He was kind of like inventor / manufacturer. Yeah.
Correct. Those guys are like the inventors of their times. But when you look at a Rockefeller and a Carnegie, those guys are the businessmen of their times. And of course they had amazing vision and all that stuff. So when I look at like businessmen, I look at Bezos because Bezos did not reinvent the wheel. He went into fucking selling books and he turned it into, and what Amazon is the best name ever for it. He just outperformed every reseller, retailer in every way, period, because his business mind is superior and he's vicious and he goes for the kill and he wants to take more land and he wants to. So Bezos to me is like a Rockefeller. Okay. But then I think like, a Thomas Edison is almost like a Steve Jobs because Steve Jobs, you know, he created the iPad. I'm sorry, the iPod, and then came iTunes, and then the iPad, and then the iPhone. That's like a creator. Now, sure, was he a good businessman too? But he's more of like an inventor. I mean, he created amazing things. Mark Zuckerberg, the same thing with having the vision to see a social network. My question is, and I do believe Zuckerberg is also a good businessman, but I don't know if he is as good of a businessman as all those old school guys. I know Bezos is, in my opinion.
I agree.
But that's what will take Facebook to, the stock to $1,000 or above in the future. If Zuckerberg's becomes as good of a businessman as he is as good of an inventor. So I view him a little bit differently.
But I would say that Bezos absolutely is a Rockefeller type. That's why I can't not think that stock doesn't just continue, because it's literally life in the US at this point is Amazon.
Yeah. It's just I don't know.
Think about it. Kerosene, Johnny, was in everybody's house. That's why Rockefeller made, besides gasoline, but kerosene was where he brought light originally to the country.
Right.
Amazon, in a different way, but I don't know very many people
more impressive to me because he basically had a monopoly on kerosene.
He did, for sure.
And it was needed. Amazon, everything they sell, you can get somewhere else.
That's true. That's true.
So he doesn't have this absurd IP. He doesn't really have IP.
Yeah.
You know what I'm saying? I mean, sure, he has names and trademarks, and that's why you can argue he might be the most genius because he's doing all things that have been done before. True. But he's just doing them better. You know what I'm saying? Like Carnegie Steel, JP Morgan, really the birth of true investment banking. Rockefeller Oil, but fucking Bezos, he's doing what's been done before.
Yeah. As I was rewatching that over this time, I was super motivated because I'm thinking we have a group of guys like that right now, not exactly, but they're definitely in the fucking ballpark and you can play, in the market alongside them if you believe that they're as good as we believe they are, which how could you not believe that Bezos isn't? I mean, he probably don't want to send like wiener pics anymore, but other than that, he's still pretty good.
Yeah. 100%, man. 100%. So
it's cool to think about, though, to think that we're living in a time and we recognize that they're that good.
Yeah. And I think one thing to talk about too for, let's say, younger, all kinds of investors is like, are you going to have so we've been talking about DraftKings that just IPO'd.
Yep. No, let's go to that for sure.
Yeah. So is DraftKings I think, it's been moving up fast, but I think it's around $30 right now. Is DraftKings at a $30 stock have a better chance of getting to $60 much faster than Amazon, which is almost at 2,500, getting to 5,000? And I personally believe the answer is yes, because and this is how I want people to kind of think, right? So if you buy Amazon, you're putting out a lot of money, right? You're putting out $2,500 for one share. If you buy DraftKings, you're putting out $30. Okay. But everything's relative from a percentile standpoint. But when you have a young company that has the ability to grow fast, if you're a young investor with $5,000 and you say, okay, Amazon sounds so great, and it is great. It is great. I don't think that's where I don't think you should buy 2 shares of Amazon, because the growth is going to be slower on it than potentially some other young. And I'm just using DraftKings as an example because it's one we've been talking about, and it has a lot of promise because it's much more than an app. It's basically the future of legalized sports gambling in the United States outside of Las Vegas. So, I think you just, as a young guy, I just don't want you to hear Amazon and just be like, oh, I'm going to save my $2,500 up for, one share of Amazon, when you could be taking that money and put it in possibly higher growth areas. But when you put it in a higher growth area, there's more of a risk of downside.
There's more risk. Yeah. So in the way I'm looking at it now, if I'm taking money to the table, I'm going to buy a little bit of Amazon, but if there's bigger opportunities like a DraftKings, or like I went in with Penn, which is ran lately, like I'm going, like you said, I'm going to take a little higher risk, but still kind of hedge on, I just want to put that in there and leave it be. It's all a percentage of what you're bringing, what you have available to invest, and I love listen, you understand this process way more than me. I don't gamble at all, but motherfuckers gamble on sports. We have no sports right now. When sports come back, Johnny, how does it not continue to, if it's green right now at $29.99 as we're talking DraftKings, or Penn was, $26, whatever, 27 today, like how does then it not continue? It's almost like that's just like rational thought, right?
So I agree.
That's how you're thinking, right? I mean, that's how I'm thinking.
If you look at history, when there's like economic depressions, recessions, certain things go up. And I'm going to use another stock as an example, ACB, Aurora Cannabis. Aurora Cannabis is a huge processor of cannabis products that's in Canada. It was up over $100.
Dude, this chart's crazy. I'm looking at it right now.
Correct.
$13 right now. Go ahead.
It was just at like $6, right? But what happens, and I'm plugging them in here, is when we have recessions, depressions, whatever you want to call it, economic hardship, people smoke more, they do more drugs, they drink more, and they gamble more. People go to their vices. So when you look at historical downturns, you are going to see an increase in vices, and gambling is a vice.
For sure.
And if you can put your money in something here, so well beyond DraftKings or Penn, there's MGM.
Yeah.
There's Las Vegas Sands. There's Caesars. And these are stocks that have gotten beat up.
Super beat up.
And if you believe that gambling is going to come back, and here's the craziest part, DraftKings is talking about, man, there's so much money being bet on esports right now. There's
wow, never even thought about that.
So we're not even in an area where there's a basketball game every night, a baseball game, and they're still doing well. It's because people need to gamble. If you're a gambler, you gamble. It doesn't matter if it's on fucking, they were talking about gambling on outcomes and futures of the Tiger King. You know, is someone I swear to God.
I know. No, I've seen those in Vegas. The people, what do they call those? Those prop bets. They're on like all kinds of crazy shit. Somebody ties their shoe during the second quarter or whatever. I mean, it's like, it's unbelievable. Well, yeah, it's degenerate behavior. I mean, it's not going away. And especially when you can do it from your phone. Get the fuck out of here.
And this is where I think people, you know, if you're in the market and you're a capitalist, I don't think you should have any shame, because, you know, some people might say, well, that's capitalizing on people who make bad decisions. Listen, I'm not worried about people who make, everyone gets to make their own decision in this country. I'm just talking about historical trends that always are consistent. Drugs, that's why Aurora cannabis went from $6 to, what is it, 13 right now?
$13.
So it was at like $6 on Thursday. Okay.
And look at that and see the crazy opportunity because of the market. Like last Wednesday, I bought in at Penn at $17.95 just because I was in it right when they first came out. I watched it go down, but I didn't realize it went all the way to $4. John bought it earlier, you fucker, which was awesome. I should have listened to you when he said something, but either way, it ran $27 today. Now it's volatile because it's going to move all over the place. But once again, what happens when sports come back? There's revenue. The things are starting to open again. So I've really been trying to pay attention to any of the sectors that are super closed down right now, that are companies that I believe will at least come back at a certain point. And so I'm going to shift into cruise lines, Johnny. I know you probably own some cruise line stocks, I'm guessing. I do too. No. Like, you don't, or you do?
No.
Oh, really? I thought I heard you talking about Norwegian.
Yeah, I owned it. I traded it.
Yeah. So there you go. So you saw it move, right? And these are stocks that were down as low as between $6 and $8 that traded once at between $50 and $60. Yeah. So for you, that's not, that business isn't a long play though, huh? In your mind.
For me, I don't know. Here's what I feel. I don't know. I don't know if this virus is going to spike again in the fall. I don't know if it's going to spike again after. I don't know, and I'm not going to make any assumptions. So I'm just going to be safe. Now, that being said, I don't own it. Will I own it in a couple days if I see it get throttled for no reason? Yeah. And then just plan on watching it and then getting out. Because if you look at the charts of the airlines, the cruise lines, those have been the greatest speculative stocks during all this stuff, because
no question
know that if we get to normalcy, those stocks are all going to be up 400% or 500%. But no one knows when we're going to get to normalcy. So what you'll see is data come out in the morning before the market opens. Airlines up on hopes and good data of economy opening, right? The next day, airlines down because Georgia hotspot popped up after up, down, volatility. That's how funds make money. That's how hedge funds make money. And you can make money as well. I do not recommend trading like that, though. I want to be very
tough, man.
Young people, I don't recommend it, man, because timing the market is how you get burned, unless you're playing with fucking monster money. I'm just saying, when I look,
because when you're getting 1-2% and you're making 30 grand for the day, that's a whole different ball game or more, right, Johnny?
It's a whole different fucking ball game. So I think things like that. Listen, are the airlines going to come back? Yeah, of course they're going to come back. Air travel is going to resume. So one could make a great argument that airline stocks are a great long. I hear it, but I also look at things like, well, shit, man. I mean, Warren Buffett took a beating and he sold all his shit.
It all.
He sold it all. So
I agree.
The bottom line when you're investing is, it's not, is that a great long? Is my money better used in a different place at this point in time? You know what I'm saying? Yeah. So I'm not going to argue that an airline could be a great long if you want to sit still for 3 years.
Well, yeah. And so that's when I went into airlines and I waited till they went to the bottom. Same with cruise lines. It's like, I looked at, all right, these things, I got in the $8 range, like 8 and some change with both American Airlines and Carnival. And I was like, look, this might be, like you said, a 36-month play. And I was okay with that because there's going to be so much uncertainty. But when you look at the charts, I'm like, man, this is a low cost entry for a potential, big upside. But, just understanding like I'm not going to go on a fucking cruise line or probably fly anytime soon. And I know there's a lot of people that think that, but there's a lot of people that are going to see that cruise line come out with that unbelievable deal to a place they've never been before, and they're going to hit the fucking button. And then the fucking airlines are, so the prices to go and travel stuff is so cheap. You can buy out. I mean, I've looked at like, what if I go to Ireland next year? Should I buy my ticket now? Like, I think that people are starting to think that way. So, and I would look, American Airlines right now is $993. I just don't know in the history of our, as long as we've been alive and investing, that I'm aware it's even been in single digits. So to me, those have been real interesting. But like you said, Johnny, if it spikes, it could be $4. They could have to consolidate. They could go out of business. So I just, when I do that, those type of investments, I count like that money ain't coming back. Like I know that when I went into it, but then like I know Carnival, because they had a big investor, they did a few things to secure cash. Today they're $14. So right now I'm looking okay on that. But if it used to trade at 53. So there is some, but it's definitely high risk. But those sectors at some point, there has to be some type of recovery, at least 50% of what their old chart would be. Wouldn't you think, John? In just rational thought?
I would think, but also a crisis. Okay. So, a crisis like this, which is, the recession is incoming. We know that from data. The chairman of the Federal Reserve said he expects in Q2 to have an unemployment rate of 20, maybe 25%. I just want people to understand, because nobody can really see it yet. There's probably people listening and say, "Motherfucker, I could see it. My mom lost her job. My dad lost."
For sure.
I don't want to say that. Maybe that was the wrong way to say it. But 25% is the Great Depression. 25% is the Great Depression. So
crazy.
Right now, we have to understand that fucking when this pandemic hit, the Federal Reserve flooded the markets with capital. That's why the stock market's doing some things right now. I would just warn people that this thing could get really ugly really fast, and all this money making that could go on right now could literally just fucking tank. Like, you always have to be aware of that. I'm not saying that's going to happen, but I do believe when businesses continue to go out of business, which means people lose jobs, which means there's less consumer money spent. How does that connect to the stock market? Well, here's how it connects. Earnings reports aren't as strong because there's not as many people who have money to spend. So this thing is going to come around. So just keep your eyes open. And that's why I don't think if you have gains out there in stocks that could be affected by this virus, don't be afraid to pull those gains off the table, man. But consequently, like I was talking about, a Shopify, they're gonna continue to get, if this virus gets worse, right? Here's how I see it, and that's why my money's there. Motherfuckers who got to close their doors have to create an online store. They're probably going to do it with Shopify. So I feel comfortable letting my money sit there.
So John, let's say this is just hypothetical, that because the belief in Shopify, even if it would only go up, let's call it 12%, which obviously I think we think it'll all go up in the next year, but you could essentially go from, an airline could go from 8 to 16. You know what I'm saying? You, in your mind, you'd better bet on Shopify, just because of the unknown.
Yeah. And because an airline can go out of business.
Yeah.
Because like I said, if there's and I hope this doesn't happen. I think there's some positive sentiment in the country right now about reopening stuff. We don't know if there's going to be a second wave of this thing. I really hope not. If there is, the economic impact is going to be something we've never seen.
Yeah.
Fact. It's going to be something we've never seen. And that's where I think you got the cruise lines and the airlines on the ropes.
Yeah, agreed. Yeah, they were heavy on the ropes already. They go through that, they're really on the ropes. I would agree with you, which is why there's a huge risk reward.
Yeah.
Right.
Yeah.
What happens if nothing happens? This shit goes back to $50, but it could easily and more likely potentially go the way you just said.
Correct.
So
Correct. So that's all about your risk tolerance, right?
Yeah.
So I think people just need to be ready to pay attention to real economic numbers and say, okay, I got to get the fuck out now. Like, you have to be agile as an investor. Like, a lot of people say, put your money in there and let it sit. And I believe in that for the most part. But if there's a tsunami coming, like we know there is, the data tells us there is, and we're looking at the stock market and we're saying, shit, man, the NASDAQ isn't too far from its record high. No. And right now, the unemployment rate is increasing, and it's at a level that in my lifetime, it's never been at. Those are just those are analytics.
Almost just fundamentals, John, that we're essentially ignoring right now. Was that the best way to explain it?
I think the administration has focused on one thing more than everything else. I think the White House has focused on propping up the capital markets, propping up the stock market. That's why they flooded it with liquidity. That's why this is at the end of the day, the chickens are going to come home to roost. I don't know when that is. I have money active in the market now in a lot of places, but I'm always cautious when I talk about stocks with people, because I can do whatever the fuck I want, right, with my own money. But I don't want to influence people to fucking think it's going to be a cash party and then just fucking wiped out. Listen, I'm ready. If I get wiped out, I'm fully aware of how I can get wiped out and where to be. That's why I like to be in places where I think I'm a bit safer. But the key word there is I think, right? So
right.
You know what I'm saying? So I think, when we talked about like tech stocks, when you look at social media stocks, social media is something, if the pandemic has a second wave or if it doesn't. If it has a second wave, more people are going to be on social media because there's less to do. That's a fact.
We already saw that happen with this.
Correct. If we don't have a second wave, social media is how people live their lives. So like, to me, that's not threatened. Okay. You could see the advertising dollars are threatened
a little bit. Yeah.
Companies don't have as much,
but they value usership. That's another valuation tool.
So exactly. And I'm going to bridge this into another stock based on exactly what you said. So I recently went fairly heavy into Chipotle. And the reason I did it is because they were
a beast. Chipotle is a beast.
It's a monster stock. It's over $1,000. And here's the thing. They said that their app downloads and usership, because at a lot of their stores during this time, you couldn't go and order. You had to order through the app and then pick up. So they had millions and millions and millions of app downloads, which means Chipotle is living on people's phones. People they can access that product and spend their money with the company easier, period. And their sales are up in a pandemic economy.
It could shift to a tech fucking takeout stock like that.
Yeah. So to me, it's like, okay, they do well when the economy is fucking normal. They're getting more people on their platform when the pandemic is hitting. So I feel comfortable there. I mean, I'm just kind of explaining, how I process it.
No, for sure. I think also too, John, you've been doing this a little longer than me at this level. So it's like, I think I've been really looking for it's weird because usually it's the opposite when me and you talk, more of the aggressive opportunities, because I never really saw any of these before. Not that any of us seen like at this level, but you know what I'm saying? You've rode some pretty good waves on some of these stocks, you know, as when I was just starting to work together with you with the new businesses. I remember you talking about Shopify at $100 and you know what I mean? Like I remember those talks. So it's like, I think because I've never experienced some of those as an investor, I'm a little bit more aggressive right now on the airlines or the cruise lines or in oil, which, you know, because I actually own some oil wells too. So I'm just heavy, like paying attention to all that. So it's like, I think that I find myself more in those buckets because I've never really experienced the possibility of that yet, if that makes sense.
Sure.
So it's kind of interesting to feel myself more drawn to that. And just because I was paying attention way more to the crude market, which, you know, and I went back and did a bunch of research, like, okay, when this kind of happened before, which this was kind of unprecedented, but what was, you know, Exxon, what was Chevron in the 80s when shit fucking tanked out like this? Well, and it kind of gave me like some perspective on, hey, you know, really Exxon stock was like in the 30s. Chevron stock was, I think, somewhere around 70 or high 60. Like it gave me some ideas that this is the levels that they were at. Now, we've never had anything shut down like this, obviously, but as it reopens, I even know myself, I put gas in my car once, bro, in a month. Now I've gotten it 3 times since. So even just myself, just understanding that things open. And so like, and because that I'm paying attention to that heavy, it's like, do I believe that it's going to $100 a barrel? No, but if it sits at 40 or 50, which isn't that far, it's 33 already, then there's a big opportunity for those, you know, stocks that I believe in that are in those categories that are the heavy hitters. By the way, that were the spinoffs of Rockefeller when he got, that's the funny shit about Rockefeller. He had a monopoly, right? They made him break it up, which was Teddy Roosevelt, and it became Exxon, Chevron, and I think one other one. And he was such a big shareholder in it. He actually made more money, which is unbelievable to think that his legacy went to that level because he was such a fucking beast, John. It's so wild. But, you know, so when I was looking at oil, I was like, all right, I invested in some oil wells. They're shut down right now because the fucking market's so low that we can't make any money with it. We have to wait till it comes back. But I looked at those prices that were similar in the 80s. And to me, I felt comfortable thinking, all right, I'm already in this fucking market. I believe we still run on oil. And do I believe that if I buy Exxon at $35, hopefully it'll be back at, you know, 60 one day. And in my mind, I thought I want to go green, but we ain't going green anytime soon. So that was my thought process on it.
Yeah.
And once again, I think I'm looking for more of those opportunities just because of my area of kind of level of being in this. So I was comfortable with it. And because I was already invested in it outside of stocks.
I think oil's super interesting because the upside's huge based on the level right now. But the one thing, you know, two things that I would have people look at and make their own decision. One is that Saudi Arabia, OPEC, and Russia, they have the ability to strangle the supply. So we don't have control over that. Like they have the ability to push oil and make it almost worthless, as I view it as almost an act of war on the United States.
That's basically what they just did, wasn't it, John? I mean, essentially,
they kicked us while we're down. And that I view those things as almost acts of war because they didn't have to do that.
No,
they did that. So that's one thing that makes me a little uneasy there. And then we touched on this on another podcast because we have seen such positive environmental effects during this pandemic, you know, smog in LA going away, water being cleaner. Let's say if a Democrat, Biden, gets elected in November, you're going to see a lot less oil-friendly policies.
No question. And I'm aware of that. And that's the one thing. But I still think, just in my mind, that the upside from where we were just at, because it was negative, right, John? Like there's still now. If the stocks rise 10 or 15 from where they're at, or even 5 from where they're at, is if a Biden gets elected, is that still a huge upside? I don't know. But, you know, when I was seeing Marathon at 1750, I was like, they're either going out of business because of this, or they're going to at least return back to 20 some dollars. And today it was like 30, I think $34. So it's like now I did have Royal Dutch Shell, which I really liked, and they cut their dividend. So the stock went down. I lost a few $1,000. I moved it into something else I liked better. So that, because that's a heavy dividend player, which is in oil. And I love dividend stocks. But so I did get bit a little bit there, but I think I got it back on some of those other buys when they were like super low. And I wasn't paying attention to the lows of Penn or some of these other ones because I think I was so focused on the oil stuff just because I was so heavy in it otherwise. So I was like really zoned in on that. You know what I mean? So
a great dividend stock that I bought and sold because I'm surprised how fast it moved is Home Depot. Home Depot pays great dividend, and that thing got beat down to 150. It's back up at 240. And
they just reported really good earnings, I think, too, Johnny.
Yeah, and again, it's like, think about Home Depot, like
235.
So yeah, it's not technology, but can you get what you go to Home Depot for online? No, not really. You need to go into a store. These are people who can give you the information on how to do home projects. You're not going to order a bunch of fucking lumber that has a huge shipping cost, that costs $20. So Home Depot during times like this, I think is a safe non-tech bet. Do they have technology built in? Of course, they have a website. But Home Depot, just a great company that really cannot be threatened because they created their own style of retail, and you are almost reliant. Most people, unless they're contractors, are reliant on the people who work there for guidance on what best to do. So Home Depot is a great company, and they pay a big dividend.
Well, and that's what I was going to say. So their dividend right now, because their stock's up a little bit, is still yielding almost 3%. It's like 2.52. Probably when John owned it, it would have been almost double that because of the price. But that equals $6 a share. So the way the dividends work, if you bought Home Depot today, which is $235 over 4 quarters, they will pay you back $6 a share for owning it. That's the easiest way to understand it. One of my kind of favorite ones that didn't really move that much at all, but has always paid a good dividend and paid it for I'll have to look it up, but for like fucking 50 years, is AT&T. And they're wrapped up in the 5G stuff a little bit, and they are having some problems with, I think, Uverse and those type of things. But AT&T really did not fluctuate during this process much at all. They're hanging at $29. Their dividend is $2.08 a share. So if you own 1,000 shares, which would be 29 grand, which is a lot of money, but you would make $2,000 a year, as long as they continue to pay their dividend. So that's kind of the basic kind of breakdown. So AT&T is kind of like one of those old dogs that have been paying for fucking ever, but their upside, they really don't grow a lot, or haven't. Could they with the 5G rollout and all that potentially? But it's like, you've got to balance. Do I like the fact that I'm going to get, a kind of a guarantee as long as they continue to pay it? Which you hate to say guarantee because they can pull it just as quick, but there's some cash on the table versus if it's only going to grow $2 a share, or it might not grow at all, so that's where that gets kind of interesting.
Yeah, 100%. I mean, that again, that's all risk tolerance, and typically, heavy dividend players are slower growth stocks, and that's why they pay a good dividend, and that's good for a lot of like fixed income people or conservative investing. I think it's great, but yeah, I mean, different strokes for different folks, right? It's like everyone has to manage their money in a way that they're comfortable, but you just have to be comfortable, and you cannot be emotional. We say that all the time, but it's very tough when you see economic conditions around you start collapsing, and you're like, okay, what do I do?
The emotional part's the tough one, right? Warren Buffett talks about that all the time, and I'm trying to get better at it, like to stay in stuff longer. If I do actually believe in the business, not be affected by 1 day or 2 days that are red or whatever. And I've gotten a lot better at it. You seem to be really solid at it, Johnny, because you've been at it longer. But even there's times probably where you're like, oh, I fucking sold too early, or I did, something like that.
I made a mistake. I made a mistake in this downturn here, and it was because I made a bad calculation. I sold a good amount of shit when the market started moving down in March, and the reason I justified it was, okay, if I sell this stuff now, my money is going to be worth more in 2 weeks because this motherfucker is nosediving. So it wasn't out of fear, because all the money that and this is my thought process, all the money I was taking off the table, I was loading it in the barrel and getting ready to shoot it back into the market, because I made a miscalculation that the market would fucking continue to crash, and it didn't. It didn't. Now, was I up on the stocks that I sold a huge portion of the money? I was, but I'll tell, like I told you, I sold like almost 70 shares of Amazon at 16.50. Yeah, I was up. I was up, but bro, I sold
$2,500 today.
Exactly. So I made a poor calculation, and it was because I got greedy. I thought my money's going to be worth more. It wasn't fear, it was greed. My money's going to be worth more in 2 weeks. Get it out, buy Amazon back at 1,300. Well, made a bad calculation. Now, luckily, between now and then, because I did put it back in the market, I've gotten my money back, which is crucial.
Yeah, and the only stuff I sold and took small losses on that I wasn't up on, it was kind of a lesson. I had owned some REITs that were, which I don't even own really any of those anymore, that were like real estate ones, and they just fucking got smashed, and they're continuing to get smashed. So you look, at the end of the day, every business I've ever been in, there's been some lessons. And this is no different, right? I loved the way they were paying the dividend. I shouldn't have been fucking with them. I got bit a little bit, but here's what I did. I said, okay, well, this is what's left. Now, because the market was at its low, where's the best place to put it to get it back and maybe plus some, and lock in, as long as the dividend's still paying in some of these, the yield is so good. And one of those plays was going to Marathon at 17.50. One of those plays was going to Exxon at 34. Like, you know what I'm saying? Like, I was looking at like, all right, I kind of fucked it up here, but where can I put it, to your point, John, to kind of recover it potentially because I made a mistake? So that's the thing. Like, you're going to make mistakes. And even what Trey talked about when he first started, like, that's kind of how you learn, whether you're doing 1 share or 1,000 shares, it's all relative to what your situation is. And I think you just being, honest about that, John, like, you're like, fuck, but it's hindsight. That's just like anything. You can always look back and be like, well, like Penn, I wish I'd have bought fucking 10,000 shares at $5. I'd be fucking killing. I would have been fucking loving it today, but I didn't.
Yeah.
That's just the way it is.
Yeah, and that's one where I got about 130% on, with some of that other money. So
exactly.
you're not gonna win them all. You're gonna make mistakes. You just, like anything else, you want to win more than you can lose. And I don't care what fucking year it is. If your portfolio, meaning whatever your cash balance is plus all your stock positions, if that motherfucker can return 20% a year, you're killing it. You're killing it. And a lot of people, are going to have years where it returns 30 and 40% if you're in some aggressive stuff, when the market's on fire, and there's going to be less. But if you can average, 20% is big. But people may think like, what? I'm up 20% right now. Well, just wait for time. Time is the ultimate equalizer. I want to give people realistic expectations. If you can manage your own portfolio and it's up 15% a year, you're winning. Yeah. You're winning. So I don't want people to hear numbers of, oh, this is doubled and that's doubled and this and that. That's not what it's all about. Your portfolio. It's not about your positions. Your positions are your employees. Your portfolio is your business.
Yeah. I want to ask you one more thing, John, then we can wrap it up. Like, as you've been investing, quite a bit of time, and it's like you hear all these kind of processes of, as you retire, you draw 4%. And then they're saying with inflation, that's not even, like, a lot of the baby boomers, this is what they do. They had 401ks or they invested, they move it into lower risk stuff, and then they draw 4%, hoping the market minimally grows 8%. It's a numbers game, right? That's what a lot of retired people do. And in your mind, is it like even a calculation like that for yourself, or how do you kind of view that? I've never asked you this before, so this is like just something that popped in my head, and I don't even know what I really even think about that whole thing. But it's like, because it all depends on lifestyle and how much money you spend and whatnot. But like, do you, as you're building this, do you have some type of calculation? I mean, you're an analytic motherfucker, so I wonder.
I honestly think,
Does that make sense? Like that, just
because of how the world's changed, because of the speed of technology, and because it's global, I don't believe in quote unquote safe investments.
Yep.
To me, like, okay, so someone would call an investment in tech aggressive and less safe than an investment in oil, like we were just talking about. I don't agree with that. I simply do not agree with that. So I think when we were less globalized and this country controlled more of its destiny, you could count on things to return at 5 or 6% a year. But now, fucking the safe bets get beat on just as much as the risky bets.
Sure.
So I'd rather take things with higher upside. So I don't prescribe to any of those equations. I don't believe in them. And I could tell you,
is there a Fosco equation?
Yeah, I mean,
Get motherfucking money.
my equation is this: outside of, and this is pretty true, I would say, outside of a recession or some major event, I don't think I would say 95% of the time I've made money. So 95 out of 100 stocks that I've held for 3 to 6 months that I've picked out myself, I've made money on. So if I'm at 95%, I don't need to listen to some advisor tell me where I should be, because I do have that, right? I do have an advisor that has put me into safe stuff. And if I look at how my portfolio returns versus that, yeah, that's safe, but I destroy that.
Yeah.
Destroy that because I think it's different. So no, I don't think there is an equation, and I believe in just like finding your groove and doing your own thing. But all those equations are fake, because at the snap of a finger, the safe investment turns into the investment that could be extinct. We just live in a world where things happen so fast.
I saw it happen so fast. Our fucking the world economy just stopped.
And I think we have to mimic that speed with our investing.
Yeah. No, well, hey, this was fun, John. Like, me and you could have had this conversation just on the phone and would have been you know what I mean? Like, we taped it, but this is the kind of stuff that is so enjoyable to talk about. And I think, even if people grab things here or there, like, that's really what we're trying to do, is showcase value on what we've been through or know, or what we're excited about,
So let's close it with let's give people, like I said at the beginning, let's give people our longs.
Okay.
Cory, give him your 10 longs.
I don't know if I have 10, but I'll give you a couple. Snap is a long for me. I just believe, I watch my kid. He's 15. I talked to Trey, who's 20. These guys don't text anybody, bro. They use Snapchat like we do text message, and the way that they've integrated things. And yes, there's some other platforms that are kind of gaining on them, but I look at it like, yo, if I think of all the other big guys, Snapchat's still reasonably priced. I think it has a huge amount of upside. And I don't know, I'm long on Snap, and I'm also long on the two major oil companies. I'm going to be long on Exxon. I'm going to be long on Chevron, and partly is because I have dividend-based income around them. I think I bought them at really good prices. Because the way I look at dividends is, I'm obviously excited about some of the aggressive things that are out there, but it's like a salary as long as they continue to pay it. Now, I had some that don't pay it no more, and I lost some money. That is a possibility too. But, as I have it just automatically reinvesting, I own this company also that I think I'm going to be pretty long on too, called OKE, which is like natural gas and some pipelines and things like that. And they've done really well for me. They're $37 today. I grabbed them like $27. They pay a good dividend. And the other day, I kind of forgot their dividend paid. I go in my account, there's $600 in dividends that automatically reinvested and bought more shares, which, by the way, are now up. X amount of percent. So, I think like my long between Snapchat, I'm going to be long on Amazon, which I'm adding to my position all the time. And then I've got some of these, kind of energy sector stocks that pay great dividends that I don't plan on getting out of anytime soon. Those are like my 3 or 4 that it kind of come off the top.
Gotcha. Okay. Just from so people can go watch it from a ticker standpoint, longs are FB, Facebook, longs are AMZN, Amazon, SNAP, Snap, longs are SHOP, Shopify, longs are.
What do you think of Tesla, John?
You
think he's too crazy?
One moment. Pinterest
okay, sorry.
Is a long, PINS. Pinterest is a long.
Pinterest is a good price right now too, $15.
No, it's like almost 19.
Oh, I'm looking at the wrong one. Sorry.
Yeah, no worries. CDW long.
There it is.
And let's see. MU Micron, semiconductors long. And Visa long. CMG Chipotle long. MGM long. DKNG long. DraftKings.
I've been looking at MGM actually quite a bit. You like them, huh, Johnny?
I like them and LVS, Las Vegas Sands. Las Vegas Sands has the majority of their income comes from Macau, China. And for those of you who aren't familiar, Macau, China, like the average bet in Macau, China, which is China's version of Las Vegas, is about 3 to 4 times the average bet in Las Vegas. So higher rollers, more money. Las Vegas Sands owns a lot more property casinos in Macau. So LVS, I don't want to name all of them, but LVS is in there as well. Yeah.
That's cool.
Yeah. So Tesla, I was having this conversation the other day. I think Tesla is a great company. I think what they do is fantastic. I think it's amazing, but I don't like the stock. I don't like the stock because their leader open sources the patent. He's gone on the record. The patents, and he's gone on the record saying that his goal with Tesla is for the United States to create the best battery powered car. And if someone else goes and does it and uses his technology, that's great. But that his goal is that. So he is not a good steward of his stock. He says things that bring the share price down. He doesn't care about the price of the stock
at all.
Period. So I think he's a brilliant guy, but I don't want to put my money in something where the guy who has the most clout in terms of moving it is semi-reckless.
It's semi-reckless is probably a great way to explain it. He's definitely a visionary, amazing, kind of figure though. But
yeah, I mean, you want to invest in Elon Musk? Here's a great stock to be long. PayPal. He's the founder of PayPal. Is a great fucking stock.
Yeah, you're right. All right, Johnny Fosco, that was fun.
Yes, it was. Yes, it was, G.
All right, so to wrap it up, hey, go on and give us a 5-star rating. Give us a positive review on iTunes. And I double-checked the other day in the entrepreneurship category, all time, every iTunes entrepreneurship podcast, Business and Biceps is number 9.
There we go.
Time.
There
all
we
time.
go.
All fucking time, John. All fucking time. You know how many motherfucking podcasts is on iTunes, bro? A lot.
They've been treading. Don't tread on us, boy.
Number 9 all time, motherfucker. All right, Johnny Fosco.
Gee!
Can the podcast be stopped?
The podcast
can't
be
stopped.